The business works when you work the business. All right, so let's chat at Karen Musil and talk about her week. We always like to interview the top person and talk about what they're doing, and maybe they can share with you some nuggets of and some insight into their numbers. Karen Musil, I unmuted you. Are you out there in conference call land? Yeah, so talk about your week. You just beat out Vanessa Dellery, but good app count too, 8 apps, so that's rocking. So talk about your week, your numbers, and any insights you can give anybody, the types of policies you're writing, simplified issue, etc.
Okay. Yes, everything simplified issue, always, always. And this week I wrote CFG, Transamerica, Foresters, and Mutual of Omaha, and wrote 2 mothers of clients that I had written or had leads for, and then also had to request special consideration for a Forester Strong Foundation app because my client had a tax ID number that was formatted like a Social Security number, but when I put it in the e-app, it came up that it was not a valid Social Security number, and I had not seen that before when it was formatted like a Social Security number, but I just got the notice this morning that that was approved, so I'm really happy for that family. And
what does that mean? Like, I don't understand. I've never heard of that. So what does that mean?
She, for some reason, does not have a Social Security number. She's been here in the U.S. for 22 years. She just bought a house, so obviously she's a valid, legal, non-resident, and has, been working, pays taxes, everything. I don't know why it's formatted like a social, but not a social.
Okay, so what kind of documentation did you have to send foresters that established the credit, or the insurability of the person based on citizenship or non-citizenship?
Well, at the appointment, like I said, I was trying to do the e-app and it wouldn't accept it, so I also did the paper app. And then I had to I took a copy of her tax ID card and also her green card saying she's a legal non-resident. And then or legal resident non-citizen, sorry. And then when I asked foresters about it, I was told I also needed an immigration questionnaire and a IRS form that would allow them to look at her taxes. And that was the one that threw me, that I've never needed before. And so it's like they just gave me the code of it, like a 4056T or something, and I'm like trying to find that on the website, and I'm like, I don't know what this is. I can't come up with it. I'm calling the help desk. They don't know. So finally went back to Doug, the head underwriter, to say, what is this form? And he sent it to me and said, oh, sorry, I didn't clarify. That's actually an IRS form. And I don't know if they actually looked at her tax forms or not to see that she had validly paid taxes. But like I said, she was approved this morning, and I'm really happy for her. She's from Ecuador. She has 2 daughters, and the 16-year-old is who was helping translate for the appointment. And I was explaining to her how important it is over the next 2 years that she be sure to keep her grade point average above 2.8, and she's like, no problem. And then I explained the volunteering so that she will be able to apply for that college scholarship in 2 years when she is headed off to college, and she was very excited about that. And then
explain that benefit for foresters, the college scholarship benefit as a member of foresters.
I love that member benefit. Anytime I'm in a home where there are kids under 18 or grandkids under 18, I want to get at least one forester's policy in that house. If a student has that grade point average of at least 2.8 and has volunteered anywhere in their community, for at least 40 hours in the 2 years before they apply for the scholarship, then they can apply for that competitive scholarship, and it's a $2,000 scholarship that will renew all 4 years of college for them. So if they get it as a freshman and stay in college for the 4 years, it's $8,000 off the cost of college. That's huge to me, and I want every family that I know to be able to get in there and apply for that. And I also let them know,
Cool. Go ahead.
Foresters leans heavier toward the volunteering hours than the grade point average. So they would rather give it to 80 hours of volunteering with a 2.9 or a 3.0 than give it to a 4.0 with just 40 hours. So, most scholarships are grade-based. So,
right. This one's is more service-based because Foresters is service-oriented, children-oriented company. Now going back to the mother, the key gang is the green card. The green card is like the key to all of it, to even put her in the running to be able to get covered, right, Karen? The green card is really where it's at.
Yep.
So it's like the permanent resident
non-citizen.
Whatever the combination thereof, we can get them covered.
Yeah.
So don't give up on people. And then I think CFG is friendly with tax ID numbers, but no green card, I believe. I think it's only one.
I believe you are right on that.
Okay, so that's the one that to go to if they got a tax ID number but no green card. Then CFG is really our go-to company there, which is in like almost all the states, but except for Alabama, I think, and Mississippi.
Alaska.
Yeah, Alaska. Okay. All right. Okay, keep going, Karen.
I also got an email from Ginny last week saying she had gotten an email from corporate saying, hey, you have some agents in Wisconsin, but nobody in this particular county. We have a client who has called in 3 times wanting to get somebody out there. Do you have somebody willing to go? And I looked at it, and it's like, well, it's only an hour further than where I'm already planning to go 2.5 hours away. So, yep, send it over to me. I'll see. Hopefully I can meet with them the same day. And so that was last Friday. I made a long drive across Wisconsin and met wonderful family where she already had a Forester's Plan Right policy in place for about 10 years. Their agent is no longer with the Alliance, and now he was ready to get coverage. And of course, he's in his 60s now as we're writing it, so it is more expensive than when she got hers. But just, again, going through the benefits, doing the application, that one was approved yesterday. And he said he has a friend in Milwaukee who also needs to get coverage. And I'm just like, all right, I will help him. Couple more hours. Ideally, that friend will come up to his house when I deliver this policy, and I'll be able to write the friend also. But then on my way back, I met with a family that I've literally been trying to meet with since December, and we finally found a day when we could sit down, and I was about it was evening appointment, and I'm tired from the long day of driving, but I'm there, give them my energy, and they're talkers, and they just want to talk, and I'm like, okay, and now back to this, and now back to this, and was doing a Mutual of Omaha Term Life Express e-app for her because she is on disability, but it's due to a neck injury, which Term Life Express is our only product that allows a person to be on disability and still get a term product if that disability is for back or neck musculoskeletal type of stuff. So I knew that was where I wanted to go with hers. And as I'm doing his, I was doing CFG, and when we went through the questions, he had said he had some inhalers but hadn't been hospitalized anything. But when I read the COPD question, she's like, no, read that one question again. And he's like, no, I think he has that COPD thing. And I'm like, all right, switch over to Transamerica final expense. So we're not covering the whole mortgage, so then we added on a forester's accidental for him, so that if he dies in an accident, 100% of the mortgage is wiped out. But if he dies from natural causes, at least we've got a year of her mortgage payments covered. Super nice family. And
Karen,
yes.
We have had situations with other agents that run into the situation where the client's expectation with mortgage protection is to cover the whole thing. Even though they're old, even though they've got like physical issues, they're thinking back in their 30s and 40s when they got a mortgage, there was this mortgage protection that was like $5 a month. And then when you go into the home, you discover, like what you just did, that, oh man, there's no way we can get them into simplified issue. We're going to have to go mortgage payment protection. Talk about the transition of managing the client's optimistic expectations of getting it covered, then you kind of, putting a wet blanket over it and then nudging them over to the mortgage payment protection. How do you kind of nurture that client from here to over here where they can get something? The something's better than nothing mortgage payment protection approach. How did you kind of move that client over to that option?
Well, like I said, we had found numbers that were comfortable for their budget. We were going forward with the applications, and then we ran into that stumbling block. And it's just a matter of explaining we can still help. We still have options. We just can't do that option. Okay, let's look at what we can do. And one of the things I always try to do in that situation is stay in the same budget range. So we were looking at the split plan for both of them, meaning half of the mortgage would be covered if they died from natural causes, 100% if they died from an accident. So we were still keeping half of that plan, being 100% of it paid for if he died in an accident. It's just to stay in that budget-friendly place, we had to drop down to only a year of mortgage payments. Now she wanted to know, well, is that the most he can get? And I said, no, we can go higher, but our premium is also going to be higher. And it's more important that you have some coverage that you know you can afford and keep in place than to have something that you end up having to drop because you can't afford it. So our plan is to keep watching for any other products that do become available. And he is trying to quit smoking, and I did let him know. I had one client years ago who had a COPD diagnosis while she was a smoker. After she had quit smoking for a number of years, her doctor said she no longer had COPD, and we got a doctor's letter stating she no longer has COPD, and we were able to get her into a term product. So encouraging him that this could be a possibility for you down the road, because they are both very healthy, aside from he has these inhalers for COPD. So it's just believing in it yourself and knowing it's still a very good thing. I knew that this wife wanted this appointment, wanted this coverage, wanted to know that she was not going to be left where she had been left before, which was, she told me with her first husband, they'd gotten together, they bought a house, had 2 kids, then got married in their early 30s, and they had insurance and decided they were young and healthy and didn't need it, and then he died of an aneurysm at 36. So she wanted coverage in place, 100%. She wanted there to be something in place. So she would love it to be more, but at least there's some.
Well, that's where you run into a very motivated buyer because they know their pain.
Yeah.
what she was after, and when the pain is big enough, it's they can't. It's almost like there's a limit to the budget, but they can't. They're the most motivated, I guess you should say. They're the most motivated to get the coverage. You did a great job. Did you have her talk about that? Did you kind of spur her on to talk more about that?
She was happy to talk, and he was too. So it was a very conversational appointment. It wasn't just numbers and the charts by any means. But on the flip side of that, my last policy that I wrote this week was from a door knock, a guy that didn't answer his phone, single guy, smaller mortgage, on veterans disability, and was kind of a eclectic, unique kind of guy, but called me back from the note, and we set up the time to meet. And when I went and talked with him, he was like, I am so excited today. Oh my gosh. He said he has Lionel trains in his basement, and I can imagine it's probably the whole entire basement full of train sets. But there was one particular car he'd been trying to get, and this morning he found 2 of them, and he bought them both for $20 each. And then when I'm talking to him about mortgage protection coverage for his home, he's telling me $35 is too expensive. And I'm like, in my mind, it crossed my mind, you just spent $40 on 2 train cars. How can $35 be too expensive to protect your home? But didn't go there. Just said, okay, well, let's look at a smaller amount of coverage. Like I said, he's single, not protecting it for someone to stay in it. It's just about protecting his equity. And he has one sister out in New York who would be the person that is his beneficiary and be responsible for being able to get the equity out of his home. So we dropped it down to $19 a month. And he's like, yeah, I like that. I can do that. Okay. He has some coverage in place.
Wow, that says something about a 20-year-old that purchases a home. Look, they're young. Sometimes their priority system's all whacked out, but they're young. But that's incredible that you were able to kind of find that price point for them that would get him to move forward with something. Because a lot of the single people, like, why am I even doing this kind of a thing? So that's interesting. Did you ask him like who his beneficiary would be and that sort of thing?
Yeah. Yep. No, and he's not young. Sorry, the premium is $20, but he's 61, I think.
Oh, I'm sorry, I missed that.
So,
61. Yep. Okay, well that's pretty cheap for a 61-year-old.
But single, no kids, no family. So what's going to happen to your home if you die tomorrow is the question I ask. It's just a small refinance loan he has on it. The house is worth much more than what he owes on it. For me, in an appointment, I would hate to see a client lose their house back to the bank over a tiny loan when that family could benefit from so much more equity if they had time to sell it. And in his case, like I said, it was very eclectic the way he had it decorated and things, that it was going to need to have a little bit put into it to be ready to sell. The average buyer was not going to walk in and be, yes, this is just what I want. So
like dark purple walls and black light and black walls and that kind of thing?
Grateful Dead, Harley Davidson, the Lionel trains.
That's pretty eclectic.
Yeah. So.
All right. Well, great job, Karen. Man, you provided some really great insight. And the beautiful thing is that they were all simplified issue. I have to share this story with y'all. There's this gal that I counsel. She's in another group, and I really feel I don't know. I feel good about helping her along the way, and she's got a lot of insights from our discussions. And I see her production just really starting to ramp up. And she calls me every once in a while to kind of get some coaching. And so she ran into the situation where just the client, the only way she could really close it in her mind was to write a fully underwritten policy. So she was getting some, and I said, well, I mean, what are you going to do? And my recommendation typically in those situations is let's get the client covered on a simplified issue first. And if they desire to try for a cheaper rate, then by all means, let's close them on getting something that we can get them, that we know that we can get them right now, and then, do it later. But she was very compelled to get the sale done because the guy was just very animate. And she showed him a preferred rate with one of our carriers. I'm not going to mention which carrier because it's not the one you would think if we were doing fully underwritten. And you're thinking, oh, I didn't know they had a fully underwritten product. They actually do, but we don't. Andy doesn't want to sell in it, but she found it. Okay. So I said, well, make sure the client knows, what might happen on a blood and urine test. So the client was older too. So even worse, if it got rated up, the magnitude of difference in price is huge. So she calls me yesterday and she says, okay, Alex, what do I do? I go, what do you mean? Remember that case with the fully underwritten? I go, yeah. She goes, well, he got his blood and urine test and they found some protein in the urine. It's like, that ain't good. Protein is not a good thing to have in your urine. And she goes, he got rated up to table E, which is, one step above table D, 200. So I think that's 250 or 225, whatever. Got rated up. And so she goes, how do I break the news to him? And I go, well, what you should have done first, I didn't do the told you so, but, you got to tell the client that you got to be real negative. Like, number one, you shouldn't have showed them preferred. You should have showed them standard and then told them, hey, it could get rated up. Chances are it could get rated up. They're going to find something. I think he's 60 something. So now it jumped way up, table E. And it's like, so you got to meet with them face to face. I mean, I went through the whole rigmarole of breaking the news to them. Hey, the good news, bad news thing. Hey, the good news is they're going to cover you. They're going to make you an offer. Because a lot of times protein in the urine is decline. They could decline it because they don't know what it is, but they're willing to take I guess the threshold of the amount of protein in the urine was such that they were going to make them an offer of table E, which jumped the price up by $100 a month. And I said, I don't know what to tell you. All I can tell you is, if you set it up properly, then you have a chance to close it because, you give them the higher price, but drop the face value, all that stuff. But here's the bottom line, gang. Don't automatically think. We only get 45% of our fully underwritten term placed. Okay? 45%. It's like 85% with simplified issue. That's why Karen can go to the bank majority of the time because simplified issue is going to get issued as opposed to fully underwritten. Like I hear you, Alex, but the client won't do anything it's like, dude, seriously, 18 years of doing this business, man, get them simplified issue first. And then if they want to come back, but there's no risk, at least you close the first one. Now she's got to go in there and get on her knees and beg the guy that, hey, it's okay. And then what do you think the guy's going to do? He's mad because it was preferred. He had quite a preferred rate. You know what clients say? I'm healthy. I don't have any problems. Everyone thinks they're healthy. I'm healthy except for a little COPD. I'm healthy except for this little nitro pill that I got to take as needed. It's like, come on. It's funny how people think they're healthy based on the size of the pill. Well, it's a little pill. Anyway, so Karen's rocking because simplified issue. I think Andrew does a lot of simplified issue as well, and he's killing it. But bottom line is simplified issue. I mean, Karen, Like, I mean, what are your thoughts on simplified issue versus fully underwritten?
I avoid fully underwritten anytime I can. My horror story on it was years ago, a client that I worked almost a year on getting that policy to issue with, additional APS and different forms and back and forth. And we came in within $10 of the premium that I had quoted, and the client said no.
Yeah, that's it's even that. Well, and a lot of it is they think that you're ripping them off. They think that you're just jacking them up for no reason. And the way I told her, I said, when you're in the house and you got to do that, you got to test them and say, look, I don't know what it's going to come back. I'm quoting you standard, but they could decline it. They could rate it up where it's a bunch more per month. So when I come back and it's more expensive, are you going to get mad at me because your blood and urine test, they found something? I close them on that before it happens because I want to know what they're going to say. And if they say, well, look, this is all we can afford. If it goes up by $5 or $10 more, we can't afford it. So, you might as well not come back. And I go, okay, well, chances are it's probably going to do that. So let's talk about another option for you. I mean, like, you got to close everything before it happens. I'm a big believer in closing stuff before it happens. Karen, we got a question from Trudy. She wants to know, what kind of policy did you find the 61-year-old for $19 a month?
Yeah, it was a very small CFG final expense, just covering a few months on a small mortgage.
Okay, so like, is that like a 10,000, 7,500?
3,000.
Okay, 3,000. And that how many months? 2 months? 3 months?
That will cover, let's see here, about 4 months.
Okay, perfect. Perfect, good.
With the
Good deal.
accidental to be 8.
Yeah, that accidental is a big deal. Okay, cool. So, I ran across other situations where an accidental policy would have been perfect, except the agent didn't have a health license. And, we emphasize to a lot of people we're recruiting that all you need is a life license, but the health license will allow you to sell other things, accident policies only, disability only policies, and long-term care if you ever run into that. It opens you up to be able to do stuff, and you can get it back later. But it's funny because this other agent I was talking to several times over the last week, there were like 2 or 3 cases that she could have closed if she was able to sell an accident policy, right? So that's another real important thing to have down the road. You don't need it up front, but if you can get your health license, it opens you up to be able to close more stuff, right? And that's why Karen can apply an accident policy to round out that coverage. So for inexpensive, the client in their mind, feels more comfortable that they, could get the whole thing covered if he dies in an accident, which, these days could be all kinds of reasons. Okay, the other, and I got to run here, but here's the other thing that I want to cover is that whole theme of closing it before it happens, all right? This is an important closing technique before, like as an example, close it before it happens. So I talked to you about fully underwritten, and you're closing it with the client, telling them all the bad things that could happen and what are they going to do. And this is before you leave the home. There's another instance when you're replacing a policy. I'm big on closing the client on what's going to happen if. So when you replace a policy from their previous company, and I'm going to tell Joe and Mary that when they fill out that replacement form, I tell them, okay, Joe and Mary, this replacement form allows the other company to know that you're replacing their policy. Now, we can't ethically and morally have you do something worse for you and your family with life insurance, replacing the policy we replace has to be better than the one that you have. And we went through this discussion since we sat down to talk about why this policy is better than that one. Now, here's what's going to happen. The other company is going to get a shot at trying to save that business. They're going to call you, and another agent's going to call you from that company, and they're going to try to convince you that, no, their policy's better than ours. Of course, they don't know what ours is, you know. So when they call you, Joe and Mary, what are you going to say to that agent? That I shut the heck up. I want to know what they're going to say. Well, Alex said, you know, we're going to listen. We're going to hear them out. We've had this policy for a while. We're going to hear them out and hear what they have to say. Oh, okay. Well, in that case, let me leave you a list of why this is better than the one you have, and then you can have him answer those questions as to what ours provides versus what yours provides. You know, because if they're going to do it anyway, or I will actually not walk out with an app. I'll say, well, I'll tell you what, if you're going to talk to your other agent, then why don't we do this? Why don't you talk to him? You think you can talk to him the next day or two? And then what I'll do is I'll come back and, you know, let's set another appointment. I'll come back and then we can finalize everything. But if you're continuing to be satisfied, seriously, I'm not going to close it if I know I get a feel that they're going to cancel it because some other agent got there behind me. I'm going to always try to be the last person in there. So I might not even do the paperwork. It's like, why? You know, but I want to know what they're going to say. And then when I feel comfortable is when they say, well, no, Alex, when he calls, we're going to say this one, you know, in fact, I'm kind of mad that we got this other one from him. I might just tell him off and then hang up the phone. I go, okay, you can do that if you want to vent. Okay, but hanging up the phone is just fine. Then I feel more comfortable, right? Time kills all deals. So you got to anticipate. Okay, so here's the other, close in advance. You close them, everything's good, you get the paperwork done. Hey, by the way, Joe and Mary, let me ask you a question. Our company's pretty thorough, and sometimes getting this policy turned in does not yank the lead form you sent in, and sometimes your lead form will go to another agent from our company. Maybe, you know, I don't know, maybe another agent from another company is going to call. Let me ask you, when that agent calls and tries to get in here to you know, do their sales thing, what are you going to do? Are you going to let them in your house? Are you going to tell them that you've already taken care of it? I want to know. I want to protect my sale. And I want to make sure that they're my client, because when or if they let another agent in there, then man, all bets are off. All bets are off. All right. So you got to close it in advance and anticipate. I call it protecting your sale. Okay. Just exercising prudence in what they're going to do when they get a call from another NAA agent, because there are like NAA agents out there, they'll go in there and snake your sale. Like, I know we don't do that. It's like we don't, but you know what? If they are not your client, meaning if they don't feel good about you and the policy where they're not going to let anyone in their home, then you know what? Then you deserve to get that application replaced and the chargeback that comes from it, because you didn't protect your sale. The client didn't feel comfortable with you, right? So why would they let any agent, if you did the right thing, why would they let any agent in there? Because you are their agent. If they let another agent in there, then you deserve to lose it. Like, seriously. So you got to do all the right things. You got to personally deliver the policy. Don't be lazy, because I promise you, your persistency and placement will go through the roof if you do these kinds of subtle things that will allow you to protect your sale and keep that client as a client. Then you can go back and, you know, do all the things you need to do. But seriously, close everything in advance. You got to tie the knots. You got to tie all the knots down on replacement, on other agents calling them up, on what's going to happen if I come back and it gets declined. I mean, you got to close that. Like, Jim Mayer, we hope that, I wish I could give this to you, but I can't. The insurance company's got to make a decision, so there's nothing to think about. if you get declined on this, I've got other programs that I can come back with. But yeah, I just want you to understand now, are you going to get mad at me if I come back, tell you it's declined, but I have other programs I can show you? Is that going to be a deal breaker? I want to know what is going to happen. So you got to close all those things in advance, tie all the knots before it happens, before another agent gets in there. Like, man, yes, it's anal and it's paranoid, but it's healthy paranoia when you're operating in this business of life insurance to make sure that another agent's not going to snake your sale. Okay, so anyway, I'm going to mute, see if anyone has any questions. Hold on. Oh, that's cool. What type of volunteering? Okay, so I know personally the volunteer hours for this college scholarship, there are recordable hours like for a high school student to go and do legitimate volunteer work. It's called service hours, and every high school student knows that to be competitive at scholarship, service hours a lot of times counts towards getting certain, $1,000, $2,000, $2,500 scholarships. Service hours, everything. So it's something they can record on their transcripts, how many service hours. Trudy says most Florida students are required to do 40 community service hours to graduate from an honors program. He also needed for the state scholarship. Most Florida high school students will have their 40 community service hours volunteering. So, man, Florida, that's kind of a done deal. So anyway, just to answer that question. All right, gang, we're done. Let's rock and roll this week. Appreciate y'all being on the call. If you got any questions, let me know. Just give me a jingle, gang. All right? Rock and roll. Thanks, Karen. Okay, bud, Peter, Andrew Peters, you're rocking it. Appreciate you, man.
This session is no longer being recorded.